As part of marketing management this summer, I completed a MarketStrat simulation assignment in which I marketed the product Sonites to a group of consumer customers. This presentation outlines the successes and the failures of my fictitious company I led over the course of the semester called Magneto. As part of the agenda for today, I will share an overview of my firm, as well as the performance for the firm, both by the consumer segment, and also look at the financial results for the 6 periods. At that point, we'll switch gears and we'll look at some of the marketing characteristics of this simulation assignment. We'll look at the segmentation of the market, look at the targeting of the products as well as repositioning the products, and then look at the 4 P's of the marketing mix: the product, the price, the place, and the promotion. And lastly, I'll round this out by reviewing lessons learned from this class. I think it makes most sense to save those to the end. So to share with you a brief overview of the firm, this firm operated for 6 periods. Over the course of those 6 periods, I produced the Sonites product, and I targeted 3 consumer segments. I started out by targeting more, but quickly learned that I needed to align to 3 consumer segments, and I manufactured 3 core brands. The first brand, Move, was targeted at the Explorer's consumer segment with a mid-price range product. The second brand was Most, which targeted the price-sensitive shopper's consumer segment. And the last brand was More, which was a new product based off of R&D, which targeted our largest segment, the savers, with a low-performance, average convenience product. So overall, how did Magneto do? Well, the firm started out, all 6 of them, on equal footing. There were 6 companies in total. But I think initially I made a few poor decisions in the first period by targeting too many brands, as well as opting to reposition the product Most to target shoppers over savers. And as a result, I think that we had some weak periods in which I've had some difficulty recovering from. I did add a product to better diversify, and as a result ended up finishing 5th overall from a stock price index perspective. From a brand performance perspective, Most started out quite strong, but faced tough competition, switching from the savers market segmentation over to the shopper segment. Overall, that was the strongest product. More was introduced in the second period and started to grow in the low price market. There is some opportunities still to improve brand awareness for the product, but overall it's definitely starting to grow now. Move, it was a weak product. I evaluated phasing it out, but instead I opted to introduce R&D to improve the product. From a segment perspective, Most ended in the 6th period in 2nd place in the shoppers market. More ended in 2nd place in the savers market, and Move was 1st in the explorers segment. So how do we do overall financially? Well, in my opinion, started out very strong in the first period, as did all the competitors. It definitely was based on some decisions that were made. There was some uphill to climb. If you see here, going in the 4th and 5th period, based on the decision to do R&D, it drove up the cost of goods sold and the unit price per each unit sold, the margin per unit, and as a result, it cost more to produce each product than I anticipated. We also had some inventory selling costs and quite a few holding costs going into the 4th period. As a result, you'll see this drove earnings negative for about 2 periods. Going into the 6th period, we did start to recover quite a bit, but at that point, this assignment was over. You did see going into the 6th period as well, share price index was recovering, volumes sold were the highest that they'd ever been, and starting to take back the market share by unit, as well as market share